With that, we'll turn the microphone over to Mr. Lynch down in Atlanta.
Well, thank you, Mark and Hugh. And actually, I think that this selection and my place on the batting order today kind of corresponds well with Mr. Academy Awards and his wagging on Walgreens, as well as Hugh and his buy on bad news or buy when no one likes you sort of analysis as well. Because my choice this month is Cisco, I will talk a little bit more about the company and the pick itself in a couple of minutes. I just wanted on the next few slides to show you how I came up with Cisco and how frequently in these roundtables I have at least started my stock hunting. First of all, I looked at the roundtable dashboard, which you see in front of you, ranked by par, and you see the highest potential return company in our current portfolio is Cisco, with an excellent quality of 74.5. So that says Cisco looks interesting. Let's jump to the next slide. I then used Manifest Stock Screening, the stock search function. You see at the top of the screen the criteria that I put in, projected annual return of 15 to 22%, quality greater than 65, financial strength greater than 70. And these are the results that I got. You see Cisco is third on that list. Again, it was just reinforcing primarily, but Green Mountain Coffee I have always seen as somewhat trendy. I may or may not be right on that, but that's why I didn't look too much further on that. And Cree had a little bit more earnings instability with a stability rating of 45 than I was interested in. So that just reinforced Cisco. And of course, Mr. Wag is again pointing out Hawkins, but you see that it is high on the list, and you see a couple of other, more than a couple, you see several other holdings in the roundtable portfolio on this screen as well. Next slide. So since I had pretty much settled on Cisco as a strong candidate, I did a quick industry study using the Manifest tools. I went from the Cisco fundamental forecast. I clicked on the industry, which is communications equipment for Cisco's case, and here you see an excerpt from the industry page for communications equipment ranked by quality, which is the way I usually like to rank that screen. You see Cisco is one of the top 4 in quality. The companies that have excellent quality. You see that while I excerpted the companies in the industry for slide convenience, I did leave in everything down through the good ratings, that being the non-bold green companies. You see that Cisco is the only excellent quality company in the industry with a projected annual return currently above our goal of MyPar plus 5. In fact, it's a little into the yellow of MyPar plus 10%. So that's how I came up with Cisco. It's the highest potential return in our current portfolio. It came up very strong on the Manifest screen, so showing me that there really wasn't another company out there with my screening criteria with greater potential return. And then I checked the industry to see if there was anything that was attractive to me more than Cisco was, and there weren't. So I decided that we would analyze Cisco closer. So let's go to the next slide. Here is the historical information for Cisco on sales and earnings, as well as projections for the next 2 years. I would just point out that I probably committed a fundamental error, traditionalists would say, in that I mixed data on my projections. The 2011 projections are value line projections. The 2012 are consensus projections from Yahoo Finance. That's partially practical. Value Line, because of the way that they move their fiscal years, don't give us individual year projections for 2012. It was also the reason I didn't use Finance Yahoo for both years was I'm actually doing a bit of a cynical forecast on Cisco to see if some of the bad press that it's getting and bad analysis, if some of that comes true, is it still a good investment? And interestingly enough, for those who say Value Line is aggressive in their projections, and sometimes I agree, depending on the company, interestingly enough, Value Line actually is more pessimistic on Cisco than the consensus. So that's why I wanted to use the Value Line figures in there. However, if you note the dotted lines for sales and earnings, which are my projections, and compare them to the projections, which are the solid dots, for the next 2 years, you will see that my projections are roughly in line with the analysts, and in fact perhaps a little more pessimistic when it comes to earnings, at least in the 2012 frame. All right, move to the next slide. Here's my full analysis on Cisco. I'm projecting a sales growth rate of 9%. One of the criticisms that Cisco's coming in for right now has to do with their margins. The argument is that many of their products are becoming commoditized, and Cisco has said publicly and has exhibited a corporate strategy of protecting market share by cutting prices when necessary, which of course can cut into their profit margins. I decided, let's go ahead and assume that some of the analysts and pundits are right, that Cisco is suffering from competition, is going to see their margins pressured, and I used a net margin forecast of 17.4, which, as you can see, is a little bit below the current net margin over the trailing 12 months of 17.9, which actually is down when compared to the last few years in and of itself. Then I just plugged in the shares outstanding, came up with an earnings per share potential in 5 years of $2.05. Using a PE ratio of 17, which actually is not that much above the current PE. I think it's between 14 and 15 right now. Gave me a potential price of $34.85 and return of 13.3, which is within our goal of my par plus 5. But what I also liked there is that Cisco has announced that they are going to start a dividend this year. Paying it out for the first time, and as recently as last Wednesday on a conference call that I listened in on, they reaffirmed that intent. Speculation is that the dividend will be 1 to 2%. If you add another 1 to 2% to the projected annual return, that makes us comfortably into our goal of my par plus 5%. So I was very comfortable with this. And again, remember, while I don't do this with every company, but I do tend to do it with the companies where I'm really going against the herd, is looking a little bit more at not the worst case scenario, because that would be bankruptcy, but the low end of the reasonable scenarios. And you can see that Cisco is still attractive, even making some relatively low assumptions, and if in fact the company does better than expected, which is what I truthfully do expect, then we'll be pleasantly surprised with it. Let's go to the last slide and I'll wrap up and talk a little bit about some of that perhaps better than expected. I'll start out with just very quickly mentioning I am somewhat puzzled with why Cisco has, quote, disappointed for the last 3 quarters, I believe, is what most people I heard talk about, that they've had bad earnings reports for the last 3 quarters. If you again check Finance Yahoo for the last 5 quarters, which they do track, Cisco actually beat analyst consensus in every one of those 5 quarters. What's been happening, they've been lowering their outlook somewhat in each of the quarters, and the market has punished them for it. Even though their results have actually been better than expected, their expectations have not lived up to the expectations of the analysts. One thing that Cisco stresses in their public pronouncements essentially is, we're good management, trust us. The industry right now is in transition. It's been in transition many other times over the last 20 to 30 years. Cisco's been in existence, and we've always weathered those transitions and have done well. And I tend to agree with that track record, and will give management some leeway and some focus to adapt to the changes, just as Mark talked about with Walgreen. Yes, there are disruptions in the market, disruptions to their business plans, but good management adapts to those things. Cisco is still a market leader. They have 20 focused businesses that they talk about, and they still claim steady to increasing market share in at least 11 of those. So for all of those reasons, Cisco is my pick this month, buying on bad news when nobody else wants it. And as Mark continually quotes me, sometimes cynically, I think, but I think sometimes affirmatively, patience is something that is probably needed here, but I think patient investors can be rewarded with Cisco.
Thanks, Cy. Well, you can rest assured that it's very the cynical to genuine ratio is very low. So it's always genuine. I think patience is a really big part of any investing perspective. And I just add a couple of things. The realm of communications, it goes right back to the campfire that Hugh talked about. That ain't going away. There's a couple other things that I might make. Cy mentioned bankruptcy. To the best of my knowledge, I'd have to look, but I don't believe they have any long-term debt. So the probability of bankruptcy would be relatively low.
They actually do have some long-term, or a little bit of debt, but they have more cash than they have debt. So
right. So it's sort of like having more money in your checking account than your mortgage is owed. Right. And that you have to think of it that way. But then the other point I would make, I listened to a pundit just the other day talk about, you got to remember, this is a capital impacted business, and it's going to have cycles. So that's part of what you see in Cy's picture. And then the last thing I would make is, this was actually a serial acquirer in the 1990s and the early part of the last decade, and the currency that they were using back then was their inflated stock price. And so they basically, in order to keep seizing those type of opportunities, they don't have an inflated stock price now, I don't believe. So Mr. Chambers is forced to go out and look for those type of strategic opportunities without an inflated stock price, and it does change the playing field for them going forward. So just some thoughts on Cisco. Good company, and I would just make the point that it's at least a triple down for us now. So it's been selected 3 times since July.
It was actually going to be my pick today if
we'll go ahead and quadruple up on it then. Yeah, we generally give the big picture guy the month off, but we'll go ahead and call it a double selection.
Yeah, I submitted it anyway because I was really impressed with Cisco this month. Phenomenal brand loyalty there too, just so you know. I mean, for practical reasons.
Absolutely.
Yes.
I'm sitting here looking at all kinds of Cisco related equipment on my desk right now, so it's there. All right, well, we'll insert another little break here. We have another category for the off the red carpet. This is the best story or best story stock for 2010. I have a couple of nominees. One of my favorites is Hugh McManus and his "I want to own a bank" speech, and just the whole concept of watching the banks for an opportunity throughout that financial crisis, and it ultimately led to, I believe, the selection, which is second only to Walgreen, is Bank of America in the roundtable model portfolio. And the second nominee is Ken Kavula and his linking Slovakia to Cleveland to mid-Michigan to China with pulled pork. And it was an awesome presentation with all kinds of neat images, and it was on the subject of Zhongpin, ticker symbol hogs. Is there a comment coming from Slovakia? Sounded like we woke him up there. No.
Nastrovia.
and the winner is of the statue. We're going with the pulled pork. So go ahead and make your acceptance speech, Ken.
Well, thank you so much.
You thank the Academy, huh?
I thank everybody. Yes. Let's keep moving.
I did want to share this photo because it's from last year's National Convention for Better Investing, and I'd like everybody to notice the caption. Ken Kavula gives this presentation, and then it says, "With Mark Robertson, not pictured." And keep in mind, I am like 3 inches to the right of where that's cut off, so you sense a little bit of angst over this. Something we've covered in the past, but fun.